I'm Kareem from Open Source Defense, and this is a talk with me, one of my co-founders, Chuck, and the CEO and president of GrabAGun, Marc Nemati. If you like the talk, remember to subscribe to our Substack, our X, our Instagram, and also a reminder that we run Open Source Defense Capital, which invests in civilian defense startups and the tech that empowers them. So if you're in that space, reach out. Now here's our talk with Marc. All right. So you recently went public. Why go public? Tell us about that.
Well, I mean, in this industry, access to capital has always been kind of difficult. So going public became an opportunity brought to us late last year. And the vehicle we used was a SPAC. So the kind of the benefit of that versus any sort of traditional IPO that we saw in it was that there was already a trust account set up with a dollar value, which we could then leverage. So the main goal, this has always been to make sure that we get a big chunk of cash on the balance sheet to go start doing stuff. And by stuff, I mean a lot of organic and inorganic growth. Really the inorganic growth is what I focused a lot on, and some previous podcasts that I've done, or even talking, prior to going public, and that's really around M&A. So this industry has a lot of very smart individuals, very good businesses that have a lot of good customer base that generate good revenues, but they haven't all had the ability to really have an exit strategy. Whether that's because private equity doesn't really play in the space, or various things like that. But having this access to capital allows us to really become an industry consolidator. And so, as going public, our main goal here was for hyper growth. And that access to capital and that cash that we now have on the balance sheet, over $120 million, allows us to go have conversations with these people that have in the past potentially wanted to, sell their businesses or grow their business by merging with another larger company and becoming part of a larger ecosystem. And now, not only do we have the cash to do that, but we also have a public stock as a currency to go acquire some of these businesses that we believe are very good value adds to what GrabAGun has done in the past. And it really allows us to kind of scale how we deliver freedom.
So why do you think I've heard you talk about this, that like private equity has kind of stayed away from the space. I mean, in principle, like you could have theoretically, if maybe you were in a different industry, gone and sold to some private equity firm or taken an investment from some large VC firm or private equity firm and gone and done the same thing. But like when we've talked to companies and, liquidity exits are just a constant theme, that like exits are hard, liquidity is hard. There aren't private equity firms, or at least not as many, that want to buy companies in this space or invest in this space. Like, why do you think that is?
I think, the Second Amendment obviously is polarizing. There's some political stuff with guns, as I'm sure you're well aware. So that, I think, just pushes out a lot of people. These private equity funds are made of a bunch of different individuals. And even if 5% of those individuals just say, don't use my money on guns, then they're just going to, err on the side of caution, just not touch a firearm business at all. But, us being in this position now with having the lack of private equity firms really to compete with as any sort of consolidator or acquirer really makes us kind of the de facto when it comes to finding and acquiring these good businesses.
So, okay. So as a company in the gun space or selling guns, everyone's scared of the ATF. People always talk about the ATF. You traded the ATF for an even scarier three-letter agency, the SEC. I mean, the SPAC went phenomenally well. But what was that process? Just, I mean, you do open yourself to a lot of scrutiny as a public company. There's a lot of regulatory requirements. I don't know if you talked with any investment banks before going the SPAC route, but what was was the process fair to you? Did you feel extra scrutinized, or was it pretty straightforward?
Well, because I've never gone through before, I really didn't really know what to expect. So there were kind of some established timelines that we had talked about from the beginning of the process, which we more or less hit a lot of those targets. As you mentioned, this is probably one of the most successful, if not the most successful SPAC in the history of the New York Stock Exchange, at least. We got almost no redemptions, which is really unheard of in any sort of SPAC.
Can you maybe
so that means
just
a lot
explain
of people,
that for
yeah.
listeners?
So
I don't know either, actually. What's
yeah,
a
no problem.
redemption?
It's actually very kind of confusing, and it took me a while to grasp it. And still, even I've gone through the process, there's still a lot of confusing pieces to it. But the way a SPAC works is, so there's an IPO that's done a few years in advance of when we become public. So that's Colombier 2. So they went public on the stock exchange as a SPAC, meaning they're a blank check company, and they have usually it's structured like 18 to 24 months for the sole purpose of acquiring another business and making them public. So Colombier has their set of targets that they go look for. In this case, GrabAGun became that target. In their initial IPO, they raised $170 million into their trust. The way the trust works is, as there's a whole process in the middle, which I can kind of cover too, but to answer your question here, so in this case, it was the Friday before we rang the bell. So a couple of days before we actually were public is what's called the redemption day. So if you are a shareholder as of a particular date, you have the ability to, one, vote if you want the combination to go through, meaning you want GrabAGun and Colombier to merge. And two, if you want your shares that you have in the SPAC or Colombier to become the shares of GrabAGun or Pew. If you say no, you get your shares back at the initial $10 plus whatever interest was accrued. If you say no, leave it in, that becomes a stock of GrabAGun and becomes Pew, and then once started trading, you can trade in and out on the stock exchange like you would any other share. So most SPACs, again, SPAC is a very interesting vehicle. Over the last several years, it became, I think they were started like in the 80s, but became popular again in the 2020, 2021, and then kind of died off and became really a four-letter word. And that's because there's a lot of volatility and a lot of crazy stuff that happens. And one of those is that redemption rate, meaning the amount of money that comes back out, as in it doesn't go to the target company, is typically in the range of 90 to 95%. Wow. And that's average. Where we, GrabAGun and Colombier, we did it to where we got pretty much zero redemptions. Wow. So we got the full money in the trust delivered to existing GrabAGun shareholders and to the balance sheet for the business for go forward to leverage, in this case, as a war chest to go buy businesses, grow the company, and all that kind of stuff. So that's kind of, in a nutshell, what the redemption part worked with the SPAC.
It's pretty good. I think a lot of it had to do probably with the positioning of the owners of the SPAC. Were probably the people in there were already very attuned to something like this, and were waiting for something like this, like for GrabAGun to come along, where Colombier 2 could go and like this is why they were in it, right? Yeah. So you guys really fit that perfectly, which is probably a good reason why you didn't get much in terms of redemption.
Yeah, if you hear Omid, he was the principal of the SPAC. This was the second SPAC. The first one was Public Square, yep. And so his spiel was, the first one was the protecting the rights, First Amendment. Second one is Second Amendment. So they really wanted a firearms company, and that's how we got connected with the guys. And yeah, it became one of the most successful SPACs.
Yeah, we'll get into the ecosystem that you're in, but yeah, I'd like to get in a little bit more, talk about the acquisitions. Kareem, do you have something else?
Yeah, well, we'll look forward to the Third Amendment company coming next.
Yeah, I think your point was trading the ATF for SEC.
Yeah.
We've always had a pretty good working relationship with the ATF, especially when it comes to software development that streamlines a lot of our processes. I think you said you've heard me talk about. We were one of the first to have a variant on digital signatures and digital storage for 4473s, which is the form you go fill out when you do a background check. A lot of the software written maintains a lot of that compliance. So we've had a really good relationship with them, because when we apply software to all these regulatory issues and we can make sure that everything stays up to compliance, then the regulator more or less leaves you alone, because you're turning in a plus report card anytime they come ask a question. So now with the SEC, obviously that's a whole different ballgame and whole different types of regulatory scrutiny. There's a lot more filings that go along with that. So, that is kind of one of the downsides of a public company. There's added costs for all this stuff. But The trade-off is that now we have a public currency. We have the ability to have more investors and shareholders that are, pro Second Amendment, gives them an opportunity to buy into a company like ours. So it definitely was a trade-off, and it was a long process. So a lot of that SPAC process was getting through the SEC. We followed what's called an S4, which is very similar to an S1 for an IPO. And these are like 700-page documents that take months and months and months, and teams of lawyers and accountants and everybody to put together. We submit the first one, wait for SEC to give some comments, takes about a month. They get back to you with a list of comments, the questions they have on your 700-page, 800-page essay that you more or less put together with financials and stuff. And then you do that. And I think we did about 4 turns of that to get us to where we are, or to get us to the ability to close the deal. So it's definitely eye-opening with the amount of labor involved in needing to get all those things to the SEC.
Wow. Maybe one more thing on this, and then we have a ton of other stuff to talk about. Other examples of publicly traded companies in this space that you have Smith & Wesson, you've got Ruger, Vista. I think maybe one contrast, and Chuck alluded to this, with like 0 redemptions means your shareholders are super aligned with what you're doing. I think for those other companies, it's, in the past, they've had issues of like, I think Ruger had a gun control group buy a bunch of shares and then do a lawsuit about like reputational risk, or kind of activist shareholders who are not actually aligned with the mission of the company. I know Vista split out their gun businesses into an entirely separate entity from, the Camelbacks and other general outdoors brands they had. It seems like you have super aligned shareholders so far, but how do you think about that kind of going forward in the next few years? Like, is that something you think about, and how do you control that to the extent that you can?
Yeah, I mean, there's definitely people who didn't want us to go public, and that can kind of be seen now from our post IPO days. We had about a week and a half of not so good run, and a lot of that is pressure, we believe, from people that don't want us to be on the stock exchange, don't want us to be where we are. So there's going to be these issues, but we're focused on building a long-term business here, and I think a lot of that will kind of go away over time as we show the market that we're here to stay, and also we have a really strong fundamental business, and it's you can push shorting whatever all you want for a while, but at the end of the day, the fundamentals of the business are really what's going to change that stock price and get it to go up. So that's what our focus is on. Additionally, a lot of the shares are held by insiders like myself and others, so we have a pretty good percentage of the business still. So even if you get one of those activist investors to buy a bunch of stock, they're not going to be able to really get anything passed or changed. So there's obviously protections against that internally on how we manage our own business, but you can't stop them from doing some crazy stuff. But long term, I think we have really good strategy on how to expand and grow this business to keep those people away, because at the end of the day, they don't want to lose a bunch of money. So,
yeah. So full disclosure, I bought some shares this morning personally. Bought the dip, and this is not investment advice in any way, but do your research. But I mean, there's good fundamentals that seem to be undervalued. In fact, to the point, this morning you guys announced a $20 million stock buyback for the next few months. So I think you obviously, your team and anyone who can do math kind of sees the disparity there. Anything specific you're looking for that stock buyback? How did that come about?
I mean, you saw what's happening in the stock before then. We know the value of this business, and we believe if the share price is below a certain threshold, that it just makes sense for us to buy it back, because we know what we're going to be doing and growing, and the whole thesis we've been talking about for months and months. We also know our business has been a stable business that's been around for 15 years. I think a lot of SPACs that de-SPAC have massive volatility, which is not the case for us too. Like there's issues there, but a lot of people that SPAC are a lot of these startups and newer businesses that are kind of built on a dream and don't have real revenues and real profits, where we're kind of the counter to that, where we are an actually established business, been around for over a decade and a half. in an industry. We know what we're doing, and now we just have even more capital to go expand on our original thesis. So the stock buyback is pretty much just the message that we see our value and we're gonna do what needs to be done.
So your first M&A is actually M&Aing yourself, looking at an opportunity and moving on it. So yeah, there's two. The reason why, and if people don't get this on the outside, probably OSD people will because they're really smart. But if for others who are not used to this industry, the fact that you have kind of hopefully opened the floodgates via the SPAC means there's going to be more SPACs, going to be more exit opportunities, more investment, less shyness about PEs who have probably the most leverage or the most flexibility, family offices. Those should be getting the green light, like, hey, this space is legitimized because of the GrabAGun SPAC and IPO. So that we're all hoping that this attraction, and OSD Capital is kind of desperate to deploy capital like we want to at the angel level, right? As, for those not aware, OSD Capital, we're toying with the idea of like a very modest $3 million fund to help do like a Y Combinator for guns, right? For the gun space. We've mostly been focused on SPVs where we can get various LPs, limited partners, to get in on specific deals, and we do that. But there's always we've talked to some amazing founders, some amazing entrepreneurs, and it always comes back to exactly what you said. What is the exit opportunity? And in kind of the old, the past 20, 30 years, there hasn't been a really interesting exit opportunity for investors. Certainly for owners and entrepreneurs, you can do okay for yourself, your family, your employees, but there's not that big picture 10x, 100x, the next Uber, the next whatever, right? So this is the first really strong sight of light, at the end of the tunnel here. So we're going to be watching carefully and encouraging more people to go down this route. Just in terms of M&A and exit opportunities, like I haven't figured this out myself, or we haven't, but what kind of companies are, you don't have to get into specifics, but what kind of companies are attractive? So I've been in the industry for 40 years as a consumer and then kind of on the inside a little bit. There's like guys making little widgets that are amazing and I couldn't live without for competition. There's bigger places making accessories that have a good brand following, but either it might be camo, it might be clothing, it might be grips or foregrips, it might be rails or scope mounts. And there's a whole ecosystem here of these guys who are doing well, but have no succession plan, no real exit. Are you looking for kind of big, obvious things where you go down to the weeds and find the little guy in a garage and get their product and get it, under your wing, or you have an idea about that?
Yeah, I mean, we could do the whole vertically integrate and go from the whole manufacturing process up all the way to obviously where the retail side of things. I think there's a lot of opportunity within, small widget manufacturing, gun manufacturers, wholesalers. I think there's a lot of different options. There's also software capabilities. So I think we have a pretty wide net of what we could do in terms of acquisitions that would be accretive value to the overall business, into the GrabAGun ecosystem. But my background is software development, e-commerce, online retail, modernization of the industry and of things. And so really our main focus is going to be focused on the tech side and product delivery to consumers and how we can speed up deliveries, how we can, reduce costs across, the whole supply chain to pass those savings onto our consumer and, really giving consumers a better opportunity, more so than what GrabAGun has done in the past. Across, I think there's several different channels that we're not really touching as of today we have opportunities to really start applying that same technology, modernization, and efficiency building into those other channels too.
So you're initially kind of thinking about larger ecosystem issues for kind of retail ecosystem issues where you can help modernize the industry probably more broadly, right? Rather than particular widgets or, a particular, at this point.
Yeah, correct.
Gotcha.
Not to say we won't go down into the widgets, but
I will say you, in your interviews and and in the name GrabAGun, and as we all know, I mean, guns are not the way to make a ton of money. I mean, the margins are pretty thin. People can only buy so many guns. I mean, I bought plenty. I think I probably have 60 guns when you get down to it, right? But you are very strong, and like there's a whole accessory world that, I want to make sure that you and your marketing and all of us are not overlooking. And the gun is just like 1/10 of the spend that's going to happen, right? There's like all the holsters and belt gear. There's cleaning stuff. There's obviously ammunition. There's just a whole lifestyle ecosystem of things. Are you like sensitive to marketing that out or developing those areas as well?
Yeah, for sure. So I think grab a gun, and the gun is the main widget that enters you into the space. But then, as you said, there's a lot of add-ons, customizations, various things you put on there that typically have higher margins. So looking at various ecosystems that allow us to expand on our catalog of non-firearms but firearm-related products. Additionally, we're in the middle of a project leveraging AI to help build out a better way to find those other items. Like if you own a gun, especially if you're newer to the space, it's your first gun or second gun, you don't necessarily know, okay, there's this cool optic, or there's this cool XYZ product. That'd be great to put on my gun you buy. And it's like, well, I didn't know I needed rings, or I didn't know it didn't fit on this buffer tube that I have. So we're working with a partner right now to leverage AI in that, to try and help the customer figure out what product fits on their existing item already, to help with customization. To then, the goal behind there is obviously it's going to expand on what the customer buys beyond just the firearm. So it's good for business because it's growing the basket. Good for the customer because now they know what products fit, less cancellations, less returns. So applying technology to that is.
I mean, AI upsell is going to be amazing across everything, and it's not a bad thing. I mean, like especially if I'm new into a space, people have a very negative connotation of upsell or whatever. But an AI-driven upsell is probably going to be super relevant and super useful, especially if you're in a new space, if you're a first-time gun buyer. Because I've helped many people buy their first gun, and it always seems to follow the same general plan. But to have an AI say, like, I know they always want cleaning kits, they always want Eye and Ear Pro, they always want like the right ammo, like all these little things, all those intelligently suggested via your smart kind of AI backed system will be a huge win. And yeah, drive the better margin items and a lot of use. Good.
How far, Mark, I've heard you say like compare GrabAGun to Amazon, like an Amazon style shopping experience, especially, when you started in 2010, 2011, I don't know if people were buying guns online or at all, or I'm sure it was much, much less than today. But where my mind went with that analogy is like Amazon kind of famously wanted to sell everything in the world from the beginning and started with books as this, from this very kind of tactical standpoint of like, well, like books are easy to sell, they're easy to ship, etc. And then expanded from books to everywhere. So like if guns are your books, how far can this go? Like what does it mean to be the everything store in your space?
Yeah, I mean, we're not going to be selling anvils. I don't know if you see that meme or that viral post that guys buying anvils on Amazon sending them back. We're not going to be doing that. But we're definitely going to stick within the parameters of outdoor, so think hunting, fishing, camping stuff, but focus typically on the firearm, at least at first, and then getting accessories. So it's like because I think it builds out a whole lifestyle of outdoor stuff. So I think that's kind of the goal there. And the Amazon of guns was a cool moniker that kind of stuck during the SPAC process, which is very fun.
Yeah. How did you, I mean, so the business is 15 years old at this point. And, fairly, the internet obviously existed before that, but like pretty early in the days of selling guns online. So how have you found you've needed to evolve in terms of like, the thing that made you special in 2010 was no longer special in, maybe 5 or 10 years later. And so you need to come up with that new thing. Like, what was the evolution of you kind of continuing to be able to set yourself apart in like 2015, 2020, 2025, and so on?
Yeah, so a little bit kind of a backstory on GrabAGun. We started in 2010. We saw opportunity. My background prior to GrabAGun I was working at IBM doing e-commerce development for Fortune 500 companies, think Walmart's, Target's, the world, all that stuff. They would come to IBM, or IBM would have a new acquisition. Typically, back then, IBM was acquiring a lot of like data analytics companies, applying all that analytic knowledge to then help the customer or even the business from e-commerce perspective. So we lit up GrabAGun because I had the understanding of e-commerce, and there wasn't really a good player in the space back in 2010 in terms of all the capabilities I knew that were available to e-commerce when we were sitting in the firearm space. So that's step one. And that's kind of what most people still see on the outside is the GrabAGun.com e-commerce platform, which we've made a lot of changes to that over the years. We've spent a lot of time with UI optimizations and checkout flows and FFL processes and procedures. What people don't see is what's on the backside. So, our entire software stack that we've built over the last 15 years, written mostly by myself, is around our whole business model and strategy and how we buy things. So I mentioned before with ATF, and we have a compliance platform that we developed in-house, but every gun that we process, how we buy it, how we ship it, how we fill it, all this stuff on the back end really allowed us to optimize how we deliver product to people. So those changes you talked about were, well, how do we get more product than anybody else? So how do we work with wholesalers to get their product catalogs, get that information to get it live? A lot of these guys back in 2010, 2012, either had some sort of functionality like an FTP or whatever that was on like 2-hour syncs. But now, we've worked with several of those wholesalers to develop, or at least design, and then most of the time they develop a process that GrabAGun would use to then integrate into our systems to get their product catalog working so we can buy more product from them. The more product we buy from them, the lower the cost that we can do. The more optionality we have into where we buy products means it's faster delivered to the consumer, so that customer experience is better. So we've constantly just been evolving and pushing how can we make the customer experience better. One, from the e-commerce, the front end side of things, but also on the backside when it comes to delivering product and what cost that we can get for those people. And then, during COVID, 2020, 2021, when nobody could get anything, a lot of those APIs that we had built in with wholesalers, a lot of the relationships that we had in terms of being a high volume player allowed us to see visibility into a lot of inventory much faster than a lot of other competitors. So much so that we would get calls from our sales reps that are inside of these companies saying that they were getting yelled at because GrabAGun got bought all of product X before the sales team even knew that it was available. So all that kind of stuff is just the mantra of applying technology, especially in an industry. Whereas, as you guys know, technology hasn't really been thought of as a necessity or as a driver, as a necessity, where we think of it as it's the only thing that really matters in terms of how we do business. And so the more we can push on that, the better it is for everybody.
Yeah.
I was going to ask, you mentioned this, you did a great podcast with Isaac Botkin last week on T-Rex Labs. We've skillfully avoided repeating the things that he covered there. But one thing that he talked about a little bit, he didn't flesh it out completely, was analytics. So there is precious little, because everything's privately held for the most part, precious little analytics, insights, data on sales volumes, TA, total addressable markets, all these things in the gun space. That is hurting us quite severely because we can't go to industry or other industries or advertising areas or places that restrict us. And a lot of them don't do it because of, hey, sorry about that. My machine had a little panic attack. Maybe it's the subject matter. They're always listening. I think somebody pushed a button and killed it. I was talking about the lack of analytics and data in the firearms industry. And I think it hurts us because we can't go to various other industries and say, hey, our TAM, our total addressable market is this. We're selling this much in optics, in ammo, in guns, or even just accessories. You, with your technology and your size, should be able to get some good approximations of how big the industry is in terms of dollars spent. I think that'll be the most important thing for getting better acceptance on the social platforms, on advertising networks, on all the third-party kind of services that we depend on banking and all that. Is that something that you can address, or can have a model for how to kind of open source or to get analytics and insights out from your business? You're public too, so I'm wondering if that kind of forces it a bit.
Yeah, so obviously we have the metrics internally that we have ourselves in terms of how we sell, but that's, I think, very focused on what GrabAGun does. So I think you're asking more industry wide, which I'd also talked in the past about part of our M&A strategy is going to be finding those businesses that have the ability for us to get more data. One, I think that's good for GrabAGun because then we can start marketing to people better. But also the idea there is to also push that information down the stream to the supply chain, because we've been asked over and over again from like manufacturers, like, hey, what's selling right now? What's good? What's happening? You know, what should we focus on, X, Y, and Z? Because by the time those manufacturers realize what is actually happening, it's like 90 days out or even longer. So yeah, it is definitely point of ours is to get more data and acquire more data, probably more selfishly in the fact that I want to process a lot of that data again using a lot of our analytics and leveraging AI now for us to make better decisions and to increase our margins. But it's definitely something that we could potentially share as well.
Well, if nothing else, you need to you can easily do that back to your vendors, your manufacturers who you're buying from. So you should be able to offer them like their own personal insights of like, from your SKUs, here's our ranking up to the minute of what's working and what's not. And you're going to become a very valuable partner to them if you're providing that. Secondly, you are a public company, so I don't know how you have to break down your sales or to what level, but there's going to be a lot of examination of your balance sheets when they come out to understand, okay, where's the money, where's the hot items, where's the money coming from as far as the different sectors. I guess that depends on how you have to break out your revenue, et cetera, which I don't know yet, but might be high level. And
yeah, right now I think we're disaggregating revenue as firearm and non-firearm, really, is how it's broken out.
Okay, we'll be smart. So it'll be at least a start, but it'll be interesting if you can look for opportunities to help make it clear that this is a very vital and very active and profitable and a good way for these companies to add to their own bottom line by supporting us.
Yeah, of course.
One thing on the whole theme of M&A in the industry and buying companies, consolidation, etc. We talk about like, is the industry underpriced or just underprofitable? Like, is it bias of people not wanting to invest in the industry or being squeamish or just not knowing it? And like there is some amount of that, absolutely. But then sometimes from, just to call a spade, like from talking to some companies in this industry and being around a little bit and going to SHOT Show, you see a bunch of companies that are just not great operationally, like not very well run, and maybe like diamonds in the rough where they have a great product but just are not very good at running a well-run company. And the corollary to that is just not making as much money as they should be making, not succeeding at the rates they should be succeeding at. And that's, I guess, the good news there is like that's maybe a solvable problem if you make those operational improvements. So how much do you think is like people just exercising some bias or ignorance in terms of underpricing versus like change that needs to come from within in the industry?
Well, the change within, I think, is an easy piece. There's definitely, that's a lot of where the opportunity, I think, is. Again, from back to the technology perspective and the industry, how it's been very slow or reluctant to adopt any sort of technology, I think is what builds out those inefficiencies, which makes those businesses not be able to operate at what they should be doing. So again, that's where we can kind of come in. If we acquire a business that we can see is strong, they're just not very efficient, and we can apply those technological advances that we've learned work in the past to those businesses and instantly make them more efficient and more profitable. I think the other question was then around talking about like how businesses are valued and being undervalued and stuff like that. I think a lot of that's just kind of supply and demand, right? Again, if there's no real opportunity for exit, there's no buyers, you're not going to have these giant multiples that are going to be applied to these businesses because who are you competing with to buy that if you're the acquirer. So a lot of that is driven by there's no opportunity for an exit.
Yeah, we got into this a little at the beginning of this kind of flywheel effect of like, okay, GrabAGun had a successful IPO, and that kind of opens the floodgates for more people, whether publicly or privately, to get involved, and that builds kind of a flywheel. So, as M&A activity picks up, hopefully companies get acquired, people make money, pour that back into the industry. Talent is a big thing of like, how do we kind of get talent into that flywheel where really smart, ambitious people like you are, a couple of years out of college, just going and like starting a company in this space. How do you think we can get more of that?
Yeah, I think the benefit is that 50% of, I think, households have a firearm. So I think that means you got 50% of the population that is at least willing to have a job or career in this industry. I think as we become more successful, becoming a public company, obviously it's good for the industry because it's providing more, I guess, what's the word I'm looking for? Like notoriety or establishment that we are an industry that's, here. Obviously we're one of the very few industries that's protected by any sort of constitutional amendment that the Bill of Rights provides us. So we're not going anywhere. And we know that we're going to continue to push on that. I think there is kind of a cultural shift a little bit over the last few years, really since 2020 in terms of gun ownership. And I think young people should look at, if they're pro-gun and they are very good at, software or, X, Y, or Z, that they look at industries like ours as an opportunity to help grow the industry as a whole, not just our business, but to grow the industry as a whole to make it bigger and better. But again, it's been around for, since the start of our country, even before that. So again, it's a very powerful industry to be part of.
Yeah. Go ahead, Chuck.
Well, you hit on this with your board. Your board of directors has important people on it. At least this has always been the complaint with open source defense, is that there are, it's not a good way to put it, but just like influential or quote unquote important people who are willing, from the C-suite, from industry, from like leadership, all these places in society that seem elevated, not many of them will step forward and admit to being a gun owner, or certainly be an advocate for gun ownership. That seems to be slowly deteriorating. And your board is a good example of that. You have people who have serious financial backgrounds in the financial industry. You certainly have, as needed, people in the firearms industry. You have Blake Masters from the VC space. Colin Noir, who's certainly a friend of ours and a great influencer and creator in the space. I've worked with Kelly on her shooting team stuff.
And Kelly,
so I guess
Andy bring a lot of public company experience to give validation to what our board can do as a public company. Then you have Chris Cox, I don't think you mentioned, so a lot of legislative stuff, NRA. Donald Trump Jr., obviously, very passionate, but also very well connected in the space and knows a lot of people. So yeah, our board is definitely like a who's who of who's in the industry, and all these people are very pro Second Amendment. They're very pro the company and understand that this was something that needed to happen.
That's great. I mean, that bodes well for the future. The one that's most interesting to us in the nerd space is obviously Blake Masters. Is he, you don't have to spill any beans or anything he's not comfortable with. Is he a shooter? Does he go shooting? Does he have, I mean, he must have guns.
He's very pro-gun for sure. Yeah.
Well, he's good. We got to get him on the podcast, Kareem, because I want to dig to the bottom of this, of how much of a gun nerd he is, or what.
Everybody on our board is definitely not just a gun owner. They're a very high-end advocate of firearms in the Second Amendment.
Awesome.
Yeah, I'd love to hear about like the process of getting Colin Noir on the board. I don't think he's a great guy, super smart, accomplished. I don't think he's on the board of any other publicly traded company. How did that come about?
So Colin, as you know, very influential in the space, connections with NRA, very strong legal mind as well. You've seen all the podcasts that he does, and he dives deep into that. So one, it's a cultural fit, obviously. Two, His legal expertise is also an added benefit, especially, being on the board of a public company. There's times when having a lawyer on there is very beneficial to having some of those conversations. And then 3, he's also a very strong business owner. I mean, obviously he's a YouTuber and a podcaster, but there's also an entire business that runs behind that, and he's become very successful in how he runs and operates that business. So to have another successful business in the firearm space that's not just retailing of firearms or building of firearms shows that he's powerful and creating a strong business. Has very good business acumen as well.
Yeah, I mean, that's something we've seen too. Just like, it's not news to anybody, but over the past few years, the kind of social media as an essential marketing and distribution pillar of any company is just, that's only getting stronger.
Especially in our industry, right? I mean,
Oh, yeah.
We haven't talked too much about how difficult it is to market or spend those ad dollars. So to have individuals like himself who understand the space and the nuance of where and when you should probably spend those ad dollars to get the biggest bang for the buck, I guess, so to say, with his background is also another added benefit for sure.
For sure. So like that's senior team, board of directors today. We talk a bunch about how like success of a company is largely a function of the quality of the early team, at least in the early days. How did you build a strong early team? Like, when in the early days of a company, before it's an obvious success, before it's making much money, you can't just go out and hire the best of the best at market rates. What did the team building look like in the first few years for you?
I mean, so GrabAGun started as myself and 3 other partners out of one of our partners' garages. So back 15 years ago, we literally started this business out of a garage. 15 years later, we're ringing the bell at New York Stock Exchange. So if there's any definition of the American dream, to me, that's kind of what it is. And so we were very tight knit with the 4 of us to build what we've done and build relationships. And we've hired a lot of good people here locally in the Dallas area. We try and keep everything here in Texas as much as possible. And a lot of these guys are, a lot of the guys that have stuck around and that are good are very pro the mission, pro firearm, pro gun. They would like to go shooting, like they're ingrained in the culture. And so we have a really good, strong team that's all very culturally aligned with the Second Amendment. And, now as a public company, we're massively growing and expanding. We have a bunch of job postings. But the same concept applies, finding people who are strong in their career and their ability to do stuff, but also very aligned within the Second Amendment and what we do and what our strategy is long term.
Are there any key hires you're looking for now? Any roles that you'd like filled at a high level?
I think online we have a marketing role. We have, obviously got to expand our accounting team, probably get more developers in house. So it's a whole kind of breadth of job roles. More
so you see, it feels like the C-suite's pretty much where you need it. So there's no missing kind of C-suite spots, and you just need to basically have those people build out their divisions.
Yep.
To keep up with the growth.
Yep.
Okay. Awesome. Do you get much lift out of the? You're kind of in an ecosystem now with kind of the Rumble, Truth Social, Public Square ecosystem. Do you get to leverage things there, or those relationships kind of help, or what?
Yeah, we've worked with the Public Square guys for a while and the Cordova crew in terms of like payments and things of that nature. So we're working with them on some, modernization and growth of how we do a few of the payment methods. Social media, we're focused more right now probably on like the X, formerly known as Twitter kind of thing, less so on the others. We do send some content up to Truth. I think we'll probably start doing some more content on the Rumble side of things. We haven't done a very good job ourselves of, becoming content creators. As part of that growth of the marketing team, we're going to start creating more content, and that's going to be very difficult to put on like a YouTube. So that's where Rumble is really going to come into play, where we can have links back to the GrabAGun site and things of that nature. So there's definitely an ability with that whole ecosystem of how to expand our business and our marketing reach.
It's good. I mean, obviously the downside is that it is preaching to the choir to the most part, and you do need to expand. GrabAGun has good reach, and like you've said before, probably reaches better into the Gen Z and upcoming generations, to give them more of what they expect. The challenge you have with this nice war chest, which can also be used for marketing and whatnot, is you can't spend those marketing dollars in any conventional space. Even though you carry things that are not guns, the fact that there are guns for sale on the platform means all the traditional advertising avenues that you would normally use on social and on video and kind of normal programmatic ad channels is pretty basically verboten. I wouldn't say it's not that it's crippled, it's just gone. Do you guys have anything of how you're going to crack that nut as far as to get this to be more mainstream in marketing and presentation?
Yes, I think I talked a little bit about like a culture shift. So some of those, I'm not going to name anybody's names, are kind of coming to the table. I've seen some emails from some pretty large advertising people like sent to me directly on how we can have a partnership to spend our ad dollars on their platforms. Obviously, it's not just like open the floodgates, you can advertise guns. But it seems like there's a shift into being able to market some of those, I don't know,
non-gun, non-serialized
adjacent products. So we're going to go down that path and see if it bears fruit or not. That's really the question to be had. There are other businesses that are kind of starting up, trying to be like an ad platform for the firearm space that, put ads on forums or blogs that are pro-gun and all that stuff, which is good, but it's still, like, as you meant, kind of like an echo chamber. So to get out there, there's some room for some growth here, and we're looking into it, and I think we'll have something here pretty shortly.
Cool. Maybe we're getting close to time, and we'll let you go. One thing we always like to talk to people about from in their journey of starting a company. Startups are kind of crazy, just like constant existential threats in the early days, fires to put out. What, as you look back on GrabAGun's history, like what was like maybe one of the biggest hurdles you had to overcome?
We've had some issues with some software providers. Luckily, we were able to structure our contracts in ways that we didn't get totally annihilated like a few of these other companies have had to deal with. But so finding, which is why we've developed a lot of it in-house and have done a lot of it ourselves, is because we don't want to be, reliant on a company to change their mind. So software has been kind of tricky to get, like, really good, whether it's SaaS solution or whatever that is for, I don't know, inventory or e-commerce or whatever. That's been kind of eye-opening. A lot of people talk about like the cancellation by debanking and all that stuff, which has always been a problem. But I think the tech side of things hasn't really been talked about enough, because every business and any industry that's operating today at any sort of success, it has a good, solid software stack behind them. And most of those are provided by these large software companies. Well, so you tell somebody that you can't have all of these tools that everybody else is using to build a strong foundation to have a business. That's why I think there's been kind of a slowdown in terms of growth of the industry. But again, that's why we've done what we've done. What else? I mean, just, maintaining good prices and product. And right now the industry is facing some sort of headwinds. It's very cyclical when it comes to like the political cycle. We've been, fortunate enough to leverage a lot of our technology again and our business acumen to kind of stay ahead of the curve when it comes to that. And so we're sitting pretty right now, but the industry itself faces these very cyclical trajectories, and being a public company, that's not always the best thing for the market, is these ups and downs. So we're trying our best at coming up with strategies to try and kind of balance out the peaks and valleys of how things work. So I wouldn't say there's any sort of big crazy thing that has set us back. We've been very cautious with how we go to market and how we make financial decisions, business decisions, to make sure that if something doesn't go our way, it's not going to put us under. So our setbacks in the past have been pretty minimal because, how we assess risk.
Cool. And here you are. Chuck, anything else?
I have a bunch of questions about the tech stack there. I want to know where you're hosted, what runs your back end. I probably won't ask that here. Maybe I'll wait till we're done.
Okay. We'll put a link to the GitHub in the comments.
Yeah, exactly. It'll be painfully boring for most people.
Yeah. All right. Well, Marc, thank you very much.
Yeah, thanks, guys. Thanks for having me.